Welcome to Agency Acquisitions and Exits. I'm your host, Peter Lang. Today we welcome Darrell Vesterfelt. He's going to tell you how a client, Mighty Networks, acquired his agency. This is a software company, VC-backed, acquiring an agency to help them accomplish the things in growth that they had on their roadmap. If you've ever wondered what it would take for a client of yours, a software company that you support, to find you to be an appetizing acquisition, this is the episode for you. Thank you for joining me.
Yeah, thanks for having me.
Okay, set the stage. Help us understand the journey that you're about to take us on. Let's start from the professional side, because that's important for everyone to give context that you're just one of us.
Yeah, for sure. So, from a professional standpoint, my transition out of college actually was kind of straight into the professional pathway that I'm taking now, which is pretty rare. But it was also not connected to what I studied at school even a little bit. And what happened for me was I learned about blogging in 2004 in my dorm room in college, and just became wildly obsessed with the idea that you could write content online and people that you didn't know could read it. And I would say that I was maybe smart enough to predict that there was going to be a really big market that followed that. But I don't think that I was. I just think that I was endlessly curious by it, and I just didn't want to get a real job. And that turned then into a lot of freelance working. So how can I make money doing this kind of work? And that turned into building WordPress sites for people, doing social media strategy for folks. And there was a good arc of my career that was, waiting tables part-time and then building websites part-time, just trying to cobble together a career. And at some point in that journey, it was like probably time to stop being a freelancer and start building an agency around what I was doing. And mostly that was because I was getting more work than I could handle by myself. And so it was like, overnight success, maybe 8 or 9 years in the making as a freelancer. And I think that was a really important transition point. Part of that too is also clarifying what the agency was doing in particular, instead of doing, whatever I could get paid to do, which is copywriting sometimes, website building sometimes, social media strategy sometimes. It was really clarifying what the agency was going to do. And at that time, I had just come off of working for a large author, where we translated one of his books into a course, into e-learning. And it was still pretty novel to be doing this kind of work at that time. Uh,
What
and
year was that? That is novel.
2013. Yeah,
Yeah,
2013.
yeah. Creative Live was on the scene at that time. Chase was building something. It was just like the beginnings of
Like none of the big course platforms were there yet. It was still
none
like
of them. It was
WordPress plugins. Yeah. It was
wonderful time.
WordPress. It was I think, like, thank God for Stu McLaren and Wishlist Member. That's how we built all of our stuff back in the day. And so that was it. It was like, oh my gosh, we had such great success from doing this with this author. I should stop doing all the other stuff and I should just go this direction. And we went that direction for the next little bit. And so I built that agency specifically with a product offering of building e-learning connected to an author's IP. And that agency, then it was a revenue share model, and that product offering iterated over time as we learned how to work with those clients best. I had a couple little detours in there, including some time as the head of growth at a company called ConvertKit. Now it's called Kit. And after leaving Kit, I restarted this agency inside of a holding co model that I now have. And so that agency ran again, second version from 2017. And I left Kit until a year ago, again, with like lots of iterations and lots of different bolt-ons and removals of those bolt-ons. And we sold that agency to a software company called Mighty Networks after a series of them being a client of our agency. And that was in May of 2025. So coming up on a year ago that we sold that agency to Mighty Networks.
I mean, you're in the age with Darren Ross, pro blogger. I mean, he
Oh
started
yeah,
what, 2004, the
copy
early
blogger.
copy blogger,
Yeah.
the back when blog post comments meant something.
Oh, they meant a lot. They meant a lot. And I spent a lot of my time posting them because they meant something. And they were like that. I think they still counted towards SEO back then. So backlinking to blog comments were a big deal. So yeah, that's also the days of when Dig and Stumble Upon could drive a significant amount of traffic to your website. And
Yeah.
so Reddit version 1, not current Reddit, but there's a version 1. Reddit was very cool. Then it was uncool, and now it's cool again. So is that version. Tumblr
Yeah.
was another big thing back in the day. LiveJournal in those early days. So yeah, that was early days of those kind of things that existed in the space. So
Yeah, we both bonded on that. It's not too different than my nerdy habits.
yeah,
I think the bloggers were a great combination of nerds who liked writing.
Yeah.
And I had a similar situation. I did blogging in that same period of time. We were also around during the emergence of the social side of it. And we were
Yeah.
like adding those social plugins to the WordPress site. Does that bring any value to the website? Is that really useful in those early days? And then it blew up, and of course, social became more than what blogging was.
Yeah. There
And
were
like
days
you,
I have like distinct memories of that Facebook share button
yeah,
putting virality on a website and crashing websites that I had because it was before algorithms. It was also like the pre-algorithm days,
yep,
right? And whoever were your Facebook friends or followers would see your content, and then that whole game kind of shifted when the emergence of advertising came in after that too. So the games shifted quite a bit, but there was a time that I kind of miss where it was like content. There was like there was kind of like a community to the content in a way. It's like if the community said it was good, then it was be good. It was not really
yeah.
the algorithm deciding those kind of things.
Yeah, similar accidental agency journey that I took. We were doing something that other people thought was really interesting and helpful, and they said, "Well, can you do it for us?" And next thing you know, if you're around at that time, you were young, you're savvy at building websites and blogs, and knew what it took to create good content online. There was just a massive gap in people's ability to do that for themselves commercially, and it was the idea that you did it with an author. Like I spoke at Left Coast Writers while still in university with my blog, and telling a bunch of 75-year-olds why they need to use Twitter. Um, and it was just like this. Such a distinguishable gap between what we were seeing, kind of the new frontier of how social and online content was evolving to the
Yeah.
traditional publishing side. And wonderful time. We're now getting nostalgic. But to the point where hopefully the listener who's gone on that same journey, which I know a lot of agency owners have been on, especially the digital ones, you ended up figuring out how to build information products and community around that. Give us a picture of the agency when you started interacting with like the software company of Mighty
Yeah.
Network.
Yeah. So, over time we had developed strategies that creators would use, and we'll just use that term generically, authors, podcasters, YouTubers. So we had learned strategies of how to sell those info products. And that was largely driven on events. So large summits, webinars, and those were the funnels. That was 90% of the funnels that we would develop to sell the info products that we would build. And at some point, that kind of thinking became more novel in the SaaS world. So what was a natural fit for us were specifically software companies in the creator space, so whose customers were the people that we understood, wanted to implement some of the strategies we use for our creators to acquire more of their own customers.
Yep.
And so we started doing services for SaaS companies, very similar marketing techniques that, wouldn't fall into a product marketing team. It wouldn't fall into performance marketing team at a SaaS company. It wouldn't fall as part of a sales team, but could drive a lot of top of funnel for those SaaS companies. And so it was a maturation for us to be adding in that layer of service to a SaaS company. Also, SaaS companies are often venture funded and have large budgets, and they could pay a lot more than our clients could pay, like our core consumer. And so we added in a layer of service after many years of doing this with just our clients to take the learnings of that creator world and audience development world to add top of funnel into SaaS companies. And so specifically with Mighty
Yeah.
Networks is, kind of how it happened. I had met Gina, who's the founder of Mighty Networks, and we had met and kind of hit it off. And she was really interested and intrigued with what I was doing from the agency side and how I was helping these larger creators build courses and community around what we did, obviously, because that's what Mighty Networks does. And we had stayed in touch, and she had asked me to be an advisor for the company, and I gladly accepted that. And just in the course of that, I started paying attention to some of the competitors that Mighty Networks had. And I noticed that one of her competitors in particular was using some of these strategies to drive top of funnel. And I just forwarded her an email one day and said, "Hey, you should let my agency do this for you because your competitors are doing it and we know how to do it. And we have a track record of doing it." We had done, in particular, this was an online summit. And we had done that for one of our projects where we had over 100,000 people register, and it had driven about 80,000 of MRR into a recurring community. And so it was like huge success. We were able to do that in a B2C side. And so I said, "Hey, we probably won't get the same results advertising from in B2B, but I think we can get really good results. So we should do this. I have a track record doing it. I know all the systems. we've tested all the landing pages already. We know what converts. We know how it works. Just hire us to do it. And they did. And it was a really big success. And so the agency came on and did work on top of the advisory role that I'd already taken. We had great success. And then after that, Gina said, hey, would you consider expanding this into more programs, kind of under the idea of using some of these creator lenses? And so would you help us set up and like build the affiliate side? Would you help us think through, 2 or 3 more programs? And so I then took a fractional head of growth role at the company, and the agency then took on several layers of projects that we were working on with Mighty Networks in an expansion of the success that we had in that one first project.
Was it a natural progression? Was it some evil
Yeah.
plan that you had? Like, give us some context.
Honestly, at that point, no. Like, the agency was one of several projects that I had under my holding company, and so my attention was kind of spread across all of those companies. But when Gina approached me, and she approached me, and I think it was the day before Thanksgiving that she called me and asked me this. And I was with family, and like kids running around and stuff, like multiple families under one house. I had like pop out to a coffee shop to even take it, where she wouldn't hear kids screaming in the background. And so I popped out to a coffee shop, and she brought it up to me, and I took that day to really think about it, and that kind of break, that long weekend break. And I said, I think there's an opportunity here. I think there's like, when if I'm looking at my portfolio, this agency, which has historically not been one of my more exciting ways to make margin or cash in my business, now all of a sudden is becoming really exciting. And so I'm going to shift my attention there a little bit more. And so I made a conscious choice based on her response to the success that we had in that project to put more of my attention in that agency direction. And so I did what I needed to transition that over that kind of December period. And then January came on as a fractional head of growth inside the company, again, under contract through the agency. And we ran the Summit Playbook back in January. So it was like now Summit Playbook. And we started taking over more areas of the company. And we had a really good quarter 1, kind of expanding from just a single project into more programmatic. And quarter 1 was really great. And that's where I started getting my I started like rubbing my hands together and started conspiring a little bit of what that could look like to make that shift. And
Where
at
was
the end,
Mighty Network in its journey? Because that was what you started advising 24. You stepped
24,
in as the
25.
VP
Yep.
of Growth 25
Yep.
range.
Yep.
So how big was Mighty Networks at that time? Did you know?
Yeah, they had at the time, I think it was 150, 160 employees in the company. They were post Series B. I think they did a Series B in 21. And so they were in that journey between Series B and Series C. And so growth trajectory was really important to them. MRR or ARR growth was really important to them. And so it was like, in my time before, I was at a bootstrap SaaS company with ConvertKit. And when I left, we were about 7 million of ARR. And so it was really exciting to me also to play at a different level that I hadn't played in the SaaS world before. And so it was a larger team, but there was a specific gap.
Yeah.
There was a specific gap in what we were doing that they weren't doing that I thought we could fill. And I went to a marketing offsite, and it became kind of clear to me that there was a gap that I thought my agency could fill in more than just an agency role. And I also was thinking through what that meant for me as like an equity holder of an agency or potential involved in a venture backed SaaS company. And
Yeah.
so it's like all the dots were connecting. It felt like one of those classic win-win-win scenarios where, everybody wins in a way that feels really good and aligned. And so on the plane ride home from that offsite in Palo Alto, I just typed up an email to Gina and I said, hey, here's what I'm seeing. I think you should buy the agency. And I kind of went for it, Peter. And I was like, I just laid it all on the table. Hey, here's the team. Here's the salary. Here's who should come over. And here's what I think this company is worth. And here's what I would like as my compensation. And here's what I think the next 3 months could look like. And it was a pretty significant letter that I wrote to her. And I sat with it that night. I wrote it, sat with it that night, looked at it again the next morning, and then sent it off to her the next morning. And she replied back 11 minutes later. So I sent the email. She called me 11 minutes later, and she
Very,
said,
very, very soft for a CEO, by the way.
"Yeah, I don't know what she was doing. She was slacking, but she said, we're in. Your terms sound great. Thank you for making this so easy for us to say yes to." And in that moment, there was like this temptation to be like, "Oh, maybe I underpriced myself." But the reality was, like, I actually gave the number that felt really great to me. And so it was just this moment where it's like, it was an easy yes for her. It was an easy yes to me. There was no negotiation back and forth. And we closed 30 days later.
Do you feel like they had already discussed like the opportunity to do more with you, uh, potentially recruit you slash
Possibly.
acquire
Yeah,
you?
possibly. We've never talked about that's a good question. We've never talked about that before in particular. So I'm unsure of what I'm unsure, and I'm unsure if that was discussed or not. The rate at which a startup in this phase moves, though, it didn't surprise me how quickly she said yes. And obviously for something like this, they had to get board approval, but the board approved it really quickly too. So for us to close in 30 days was it would stand to reason that maybe there were some conversations that had happened before, but I also think it's also just the pace of a Silicon Valley based SaaS company. So
Yeah, for sure. When you were expanding the ways you were supporting them as an
yeah.
agency, were you starting to turn away business? What allowed you to give them more attention outside of maybe a consistent playbook of delivery that you maybe were offering others?
Yeah. So we did turn away some business. And then I also just gave more of my attention to the company because again, in the holdco model, I had my attention split across several different things. And so in that December timeframe before I came on, I was pretty intentional about making sure that those other holdings that we had the proper support where I could remove more of my time and kind of like if I'm rebalancing the scales, kind of pulling things off of other companies and putting it into this agency. So that was a large part of it. And so essentially my full time focus went to the agency, where it was maybe 60% or 55% before that.
Okay, well, help me understand this bit, which is always interesting. When people own an agency within a holdco model, that agency is a very useful team to deploy across other assets in that portfolio. You're an experienced marketer, you know how to do it, but the last thing you want to do is be that marketer for all the things that you own. Did any consideration around, hey, if I no longer have this team, you're kind of losing some horsepower available to the holdco?
Yeah, that was the original theory of the agency inside the holdco. But what we were learning is that some of those shared services were only helpful at particular stages. And, as those companies matured over time, them building their own functions inside of the company was actually better than having an agency to support outside of it. And so
Yeah.
we that was a consideration as we thought through it, but we also thought, early stage marketing, there's a lot of really capable and competent people, and we didn't necessarily need to have an agency inside of the ecosystem to be able to do that early stage marketing. And then the other thing is, as there's a little bit of like a logic gap for us here is early stage marketing is you want somebody scrappy who can be, potentially multifaceted,
Yeah.
and you're also price conscious at the early stage. So an agency is not necessarily the best model at that early stage because the agency just for what it is, like it has to have markup on the services
Yeah.
that you could have just got with a group of freelancers or a single smart, really capable marketing leader. So it was a good theory, but then as we practiced it more, we kind of saw some of the flaws in our theory. And so having an agency didn't feel important to us inside that ecosystem in that particular way.
Yeah, very helpful context. For a founder who's built whether a deep partner relationship with a SaaS provider and continues to expand their ways to service them, or from a client perspective, let's use both. What made you feel confident you knew how to write up a deal structure, an opportunity that fit you and them?
Yeah, it's a good question. I was confident I knew what would fit for me. And so I think there was a little bit of fear. I think there's a little bit of fear in like kind of shooting my shot because the answer also could have been no. And I think there was, I maybe had like a 70% belief that I was doing it in a way that was a good fit for them. And because I had been integrated and just the nature of how I am inside of the integration, I've asked a lot of questions and I felt like I had a good understanding of where they were at too. But it wasn't a guarantee for sure. And those 11 minutes maybe felt like 11 years because it was, possibility of maybe in that 30% chance that it isn't a fit, there's like maybe a fence taken, or maybe I'm assuming too much, or maybe I've misread something up until this point and I'm just off base here. And maybe that overstep is them questioning the relationship at large. And so there is a little bit of risk in that
Yeah.
gap of understanding. But I had just I had felt a level of confidence that there was at least, if I'm doing a cost benefit analysis, there's at least a higher likelihood that it's going to succeed than not. And that was just from the relational aspect of being so integrated with them before. And
Yeah.
I knew the vision. I knew what they're trying to accomplish. And I think any good salesperson is needing or needs to, that is the core part of what they need to understand as they're making any kind of pitch is, I'm not trying to sell you on something. I'm trying to solve a need or a problem that you already have. And so I saw that need and that problem. And so it gave me a little level of confidence in, not making a pitch so much as offering a solution to a problem that I know that they had.
Great. Yeah. Mergers and acquisitions can solve any business problem.
Exactly right.
And you're able to bring that in as a team capable of
Yeah.
direct intervention to a software company and transform. I want to double tap your holdco thinking, because that
Yeah.
mindset is really important as a distinction between a typical agency owner who owns one business.
Yeah.
You have a portfolio of assets. You're looking at what those assets generate in regards to free cash flow to you. And you're also looking at the value of those assets. And you had this agency model that had, probably significant client concentration as it was developing and expanding with this
Yeah.
big relationship, which you love, and it was productive. You were also deepening your insights into the value of their equity,
Yeah.
what they're fundraising for. And you're saying, okay, I have this equity over here, and they have this equity over here in regards to how they can interact and fundraise. Can I trade those two things? Can basically use my equity to increase the value of the things that you own underneath this holdco. You're playing a very different game than most operators and founders play. Can you unpack that thinking for them a bit?
Yeah, I think that's exactly right. And, this is the funny thing is I think agencies are probably more sexy from a free cash flow point now than ever with AI and how wonderful AI has been. And it's crazy as even a year ago, the thinking was different. But agencies have never been the best way to find high margin free cash flow, right? There's a lot of effort. And that effort has historically been as revenue grows, so do expenses and some sort of correlation. And maybe with efficiencies over time, you can widen that gap a little bit, but it's a tough model. And then maybe as we were souring on the idea of needing an agency inside of the holdco model, we were starting to have thoughts of what do we do here, and shuttering the agency is one option, and putting our attention to more like higher leveraged opportunities is one thing. Everything's an opportunity cost. If I put my attention in one thing, I'm not putting my attention in something else that is higher leveraged. And so the service model was like definitely a thought pattern. And at that point, I'd also been, running it for a long time and
Wow.
a long time. And we had tried several different iterations of bringing in leadership to run that company. And, what I found in agencies that's harder than in other business models. And maybe that's a flaw of my own leadership or some sort of flaw that I have, but I found that to be harder. And so the options were we can shutter this and that doesn't feel right because there are team members that we really care about and there's clients that we really care about and there's a lot of maybe sunk cost bias that even plays into that of like I don't want to get nothing for this.
Yeah.
The other option is like, all right, let's attempt bringing in leadership again, but that feels heavy and hard and we haven't had a great success at doing that in the past. It's also such a specialized skill set that most of the people who are good at it are doing it for themselves and they don't necessarily want to do it. So there's a huge curve in learning the particular skill that we were working on. It's not the same as like hiring a great marketing person from a different agency. It was a highly specialized offering that we had.
Yeah.
Then the start
Well,
option appeared, and I was like, "Oh, this maybe feels like the
yeah.
highest leverage. Like I can do some of this trading here, and it feels like the win-win between both where I'm at, wanting to transition out of this agency work, and then transition in to solving a need that this company had.
Do you feel like your mindset would have been different if your primary income was coming from the agency?
Probably, yeah, probably. I'm not
Yeah.
exactly sure how, but yeah, that stands to reason for sure.
Yeah, the benefit of someone in your position, you're looking at the asset independent of its free cash flow potential,
Uh,
and it's a risk and return game.
mhm.
You're saying, this company, if I go all in on this and make it my only thing, maybe I can take it to a level that's productive and
Yeah,
contributing to my quality of life, my investments, my wealth creation. But that's required all of you.
yeah,
When you're already at a stage where you have your time being split
yeah,
across a variety of different companies, you're rank stacking priorities constantly. And so it just doesn't generate the same level of leveraged return.
Yeah.
And someone who's in their business today listening to this, it's really hard if this is their primary source of income for them to
Yeah.
think about how to trade the asset for something that's not a equivalent cash flow
Yeah.
position.
The variable would be is like, what role do I carve for myself in this next transition? So,
Yeah.
and what's my level of confidence that that will then continue to give me that level of income or more? And so I think that probably would have been what I was thinking about here. So if that was my primary source of income, it would have been, do I believe that I have another like gear to shift into by putting all my attention here? Do I have it in my tank? Like, just practically, do I have the energy or will or desire to go another round of trying to take this up? That was a no in my checkbox, but maybe that was different if I had one. And then if I'm going to transition here, like, there's a level of security because I own this asset. So as long as I keep going on this asset, I have security as long as something doesn't happen crazy in the market or some massive downturn. But in a lot of ways, we were kind of shielded from some of that downturn because we earned with our clients. And
Yeah.
so they also wanted to earn if there was a downturn, and we would find creative ways and make some pivots. And we had done that during COVID already once. So, there's some security and stability. So I'm not trading that stability, right? So what
Yeah.
is my level of confidence, or how am I contracting a role for myself that could guarantee that for a period of time? And, that could be tied to, that could be tied to several different strategies of how you could negotiate 2-year, 3-year terms to get yourself that space. It could be tied to vesting schedules, or it could be there's lots of things that I think could be interesting in thinking strategically about how you would gain that level of security. Because I've also heard horror stories of these kind of transactions happening, and then 2 or 3 months later, not done properly, people are out, and that security that you had, if it was your only source of income or cash flow, is now gone, and you're kind of left rebuilding. And depending on how it was structured, maybe you have a pile of cash, or maybe you have a pile of equity that's not paying you any cash flow, or a combination of both. And so I think there's lots of strategies. That's what I love about M&A so much, Peter, is there's just like, not infinite, but also closer to infinite than singular
Yeah.
options when you're looking at these deals to really solve your own problems.
100%. Well said. Another way to think about it, which we haven't touched on, is you became an investor in Mighty
Yeah.
Networks. So when you trade an asset, like you do, you can get different forms of consideration. And so typically when you sell an asset into, say, a software company, they're going to trade in their equity. They're going to trade like as if you're an investor putting capital to work in the business.
Yes.
And so it's really interesting because you can invest with sweat equity, you can invest with cash, and you can invest with assets
Yeah.
that fill holes. So you became an investor
Yeah.
beyond just your work and potentially advisory. What made you comfortable? You touched on it a little bit, but what made you comfortable to change that position in relationship with them?
I believed in the vision. Like, when I had several conversations with Gina, and I believe her. When she tells me what she wants to do and what she's capable of doing, I believe her. And that's step one for any good investor, is the believability of not just the project that you're investing in, the founder that you're investing in. And that was number one. Number two is like, I knew I could make an impact on that investment. So it wasn't just that, it wasn't a passive investment. It was like we were actually coming in to make an impact on it. And so I like betting on myself. I believe deeply in myself. I wouldn't be an entrepreneur if I didn't. And so on some levels, it was not just the believability of Gina, her track record, the evidence I was looking at from that standpoint was like, actually, I can impact this as well. So those two things combined, it was a no-brainer for me to start thinking in this way. And so, in February of this year, I transitioned out of a full-time role, but I'm still on as an advisor because I am an investor and I want to see them succeed. And there's still a role that I can play as, we've transitioned the things that I was working on into other departments, and we built teams around it where I wasn't needed. And my attention is still split. And with my holdco, but there's a role that I still play because I'm an investor. And so there are things that the company asks me to do, and I am glad and happy to do as an investor, helping to drive revenue and business and growth, even though I'm not playing like an employee level role at the company. And I think that's a huge part of that mindset shift. I also had been many years as an investor in other companies. And so like that was a thing that was natural for me already. Is this is actually what I've accepted as my career path, as an investor and not just an operator. And so it was easy for me to make that switch because of those three things. Like, I believe Gina, I could bet on myself, and I already had that investor mindset coming in. So I was already starting to think about it, which is why I made the pitch to begin with.
Great. One of the things I stress to the operators out there is you're a capital allocator, even if you don't know you are, because
Absolutely.
you run a family business. The money that you make in your single company today, or even two companies, goes up to the family, and you
Hmm.
make decisions around personal investments, retirement. You're making business decisions with that capital. To just stick a hold co in between you and the operating company, and then
Yep.
think of how you can reallocate capital to generate different levels of return. And that's the advantage that you had in this. You were thinking like a capital allocator, and how do I get more from this asset and yield,
And even
which
if
is
that's one step
fantastic.
And even though that's one step too far for current operators, you're a capital allocator with your time. So like it's a better way of thinking about, it's like, if you are a good operator, you are properly allocating your time to its highest leverage.
Yeah.
And so like the best entrepreneurs, in my opinion, think like investors all the way down, even if they're not thinking yet about like, oh yeah, maybe I could put a hold co model in here or not. Like,
Yeah.
you already are. And whether or not you're a good one or not is just a matter of how you talk about it. So are you leveraging your time well? It's like you're allocating a time capital. That is sometimes maybe the most important part of capital at the early stages. And so just like reframing your mind around that, even if you're not thinking yet, how am I reinvesting the profits or the money that's coming back up to the family, is like you're a time allocator. And if you're thinking in that way, it starts to get you in the mindset where eventually all of the next logical progressions get to how am I allocating my money as well. And you just start thinking of higher and higher leverages for your time and your money, because you realize that at least the time piece is the most finite piece that you have. So I think there's like a mindset shift that happened for me, maybe even earlier, before I started thinking holdco model, which was, I'm a time allocator.
Yeah.
If I'm not thinking like an investor here and I'm not being shrewd with how I'm allocating this time, it's an earlier, maybe an earlier step of progression there as well.
It might be helpful for us to unpack how you were able to get to such a pragmatic valuation and deal structure. A lot of folks have a tendency of overvaluing their baby, their business, or not sure how to value it, especially given kind of the creative opportunity being created by this relationship. How did you go about thinking about it? You described it as you knew what was enough for you, but was there
Yeah.
any formulas, any precedent, anything that you're using to get to that?
So mine was, this is maybe a boring answer, but I had another shareholder. I had actually two other shareholders in the agency, friends of mine who wanted to take a small percentage of the agency at some stage. And so in our operating agreement, we had a valuation mechanism that was already predetermined. That was based on, kind of like it's like a cash flow multiplier that was already predetermined. So because those guys had bought in, and because that mechanism was already predetermined in our operating agreement, that was what I had to pitch to Gina. I was like, hey, I'm not the only one on this cap table. So if you would like this to happen, then this is like in our operating agreement, how we've done valuation up to this point. The way that we have the smoothest transition here is if we just use this exact same valuation mechanism for this transition. And so we just use that. And I think that was, again, if you kind of even go back earlier in the ethos, like every single company in our operating group has valuation mechanisms baked into their operating agreements for just these exact purposes. Is we want to have kind of common ways of thinking about how we would value this company, so that if there are shareholders that want to come in, or we want to sell parts of the company, or we want to get to these M&A structures, we have predetermination here in the way that we do it. And a likely good partner, and this is not 100% of the time, but a likely good partner is going to understand that valuation mechanism and agree with it as well. So it just makes those transitions more smooth. And we've just predetermined that, sometimes before we make our first dollar,
It's
so that
important. Yeah,
we
yeah.
we aren't like negotiating or relitigating that at a later time.
I've never explained it that way, which is very smart. All of my operating agreements have what you described, which are buyout provisions if there's partners,
Exactly right.
treatments of valuation depending on periods of performance within the business.
Yeah.
And they're predetermined because we always begin with the end in mind when we form companies.
Yeah.
And so an operating agreement is more like a prenuptial agreement. It's everything you're going to do if you get a divorce,
Yeah.
that you want to document of how you're going to continue or avoid divorce as well, in your governance of a business. But it's smart. It's actually really smart if you think about it from I can stage requirements intentionally for a future sale. And I've never
Yeah.
thought about it that way. It's 100% true. So if you're at the stage where you've built a standard operating agreement from some template form, and you are the sole owner, you don't have these in there. It's when you have partners do you typically have these type of conversations, or people who
Yeah.
invested in or bought in. And so it's such great advice to be intentional about building within the operating agreement a market formula for valuing the business in opportunities of change of control or sell of the business. So when something like this comes up that's not typical, your client wants to buy you out, take you private, a technology partner wants to add service capability, which is growing in popularity with AI, you say, my hands are tied. This is the valuation. This is how we have agreed within our operating agreement to approach these types of opportunities. That's the rules of engagement here.
Yeah,
It's so helpful.
it is. And listen, had they come back, or even in a different circumstance, if they come back, it wouldn't have been a no necessarily. But when speed and ease and that kind of alignment happens, it was a forcing function of us
Yeah.
defaulting in that direction because speed was part of the decision matrix that we were looking at. So it doesn't mean that we have to go that route, or that any partner who doesn't agree with that valuation mechanism can't negotiate with us. But it's an interesting, you know, and it's just
You've
an
created
interesting
a
forcing
default though.
function.
Like
Yeah,
it's not, you didn't even make it a discussion. When it's undeclared, it's a discussion. It's an
correct.
opinion. It's subjective. But when
Yeah,
it's a default of how you've been operating and you have other partners under that precedent, it just makes them easy just to go along with it,
yeah.
especially when the capital deployment or the ask isn't like meaningful for them, proportionate to the size of the business and what
If it
what they're
falls within
investing
the
in.
margin that they were expecting it to be already,
Yeah.
oftentimes what happens in negotiation is, even if it falls within that margin area, they're gonna try to get it to the bottom of that margin area.
Yep.
But if I have this predetermined, stated way of approaching it and it falls in that margin area, I think it just defaults to, "Okay, great, we're in the area." This
Yep.
feels harder to, have him break all this process than maybe negotiate down to the lower part of our margin area. And, it's interesting. And I think this is probably, I don't wanna give myself too much credit here. I think this is probably more like Monday morning quarterbacking here than it was super intentional going into it. But, it ended up being really a really positive forcing function of it. So I'm smart, but I don't know that I had thought through. I'm able to articulate it way more clearly now on hindsight than I maybe was going into it.
Well, and
So
that's why we're recording this.
yeah,
The
for
point
sure.
of is to create it for you who is listening to this to go, oh yeah, that's really something we should have and why we should have it. Um, I want to make sure that I double tap what you said. A buyer doesn't have to pay on those terms. They can negotiate it. But when they're doing a deal that's assimilating you into the company as team members, especially meaningful team members, they try to avoid creating friction. They don't want you to come in with a bad attitude. But
Yeah,
so if you have some of these things as defaults and they're fair market, they're within a zone of fairness that they can work with, they'll just go with what's there, so they don't have to spend time and money on it. For them, their growth and what they're looking to achieve requires time and energy. They don't want to revisit something if they don't have to. So it's just a wonderful way of thinking. You're set up for success by planning ahead. And right, hindsight's 2020. But that's the whole point of this. We're speaking to you, someone who might be approached with this type of opportunity in the future. Now, I do want to talk about transition. So, how did you announce it to your team?
well, they already knew, at that point, they knew that Mighty was a large portion of our revenue and a large portion of our focus. It was super easy. It was just like, "Hey, this is what's happening." And there was one person that didn't come with us, and it wasn't a fit. And so that was a little bit of a harder piece, and letting them know and giving them kind of ample and proper time to transition, and find their next thing. But everybody else, it was like, in the same way that I was able to be excited about the opportunity for me, it was also an opportunity for them. I mean, I think just objectively, it is more stable to work for a larger company that is venture backed than it is for an agency that any major move, there's just risk of potential rifts or things like that that happened. And Mighty was also very generous in kind of passing over their standard employee stock options to my team as they came over. So it's like, hey, I wasn't giving you stock options in this agency. You're getting stock options in this too. So it was exciting, and it was a change of pace, and they got to be a part of a bigger thing. For a lot of people in agencies, I think that I don't know the exact data on this, but there is quite a bit of turnover because
Yeah.
the idea of context switching on a constant state is for very few people. And so there was also like a sigh of relief of, oh, we have one client now. Like we have one project. We don't have to work on 3 or 4 different projects across the board was a sigh. So it ended up being net positive for most of the people. And, it was just, hey, I'm excited. I think you should be excited too. Again, for most of the team. And they all were. So everybody accepted a role that was offered one. And I think it became a net positive over time.
The average tenure within the sector is about 2 years. And we measure it from an investment perspective. If someone's been with you longer, that's actually not a good thing. It means they haven't left
Okay.
yet. And the vast majority attribute the reason for that being a compensation expansion. So I spend 2 years with you, I learn some skills, I get paid up to this threshold. And then when I go back to market, I now have more skills and I can earn higher salaries working for other people. And so it's just the normal ascension of people's desire to earn more money over time.
Yeah,
And it's really hard for a small business to keep up with it, which is, I
for
think, to
sure.
your point, which is a small business can only absorb that cost if it creates the yield from their contribution. And most of the time, that's just not going to happen. The person who's
Yeah,
going to want to earn more money is not going to produce more impact relative to that. And so they have to do it by leaving and switching companies. And then, of course, it just drains you. Agency land
it does, man.
is you got to have a certain appetite for rapid stimulus change,
Yeah.
context
Either appetite or
switching.
the right mix of neurodivergence, right? And
Yeah, it's a certain
sometimes
type.
it just like fits in there perfectly for some folks, and more power to them.
Others,
But
it spits them out. So let's kind of bookend it with going back in time. If we were to advise you before you wrote that email for the person who might be writing a similar type of email, what slight modifications would you have considered to make it slightly better? Because they did say yes rather quickly. Like, what could have pushed the envelope a little bit further, given hindsight?
this is gonna be a bad answer. This is a bad podcast answer. I don't know. I think I hit the sweet spot. And again, I think that's maybe a little bit of luck too. I think if I had pushed it more, it may have turned into a negotiation. And so I think like if I'm giving feedback to that, it's like make sure you listen or you ask enough questions to really, really deeply, deeply understand the problem that you're going to solve. And I think that again, probably in hindsight, I'm able to see this better. But I think I hit a sweet spot that was super intuitive to me at the time because I just had such a large data of understanding of what the problem was that I was trying to solve for that I think I kind of hit it. I think this is probably as far as my career goes, is probably like a grand slam that I won't hit again many other times because sometimes the variables just don't line up. But I think the longer that you can spend, the deeper you can probe, the better understanding you can have of not what you need. That's a really easy thing to solve. That's like, a walk around the park in a couple hours to figure out what you would like. But like, how much energy are you putting into understanding the problem that you're solving into the organization you're coming into and communicating it in a way that makes it feel like a sigh, like when they read it, it's a sigh of relief. And I think that's the mindset that you need to be into is like, you need to kind of take yourself out of your own shoes, put yourselves in the shoes of that founder or executive that you're writing that letter to and make sure that as they're reading that letter from you, they feel like a sigh of relief. Like, I can't believe I didn't think about this before, or, oh, I have been thinking about this. I'm so glad that this person sees and understands it. Or, oh my goodness, this is such a good fit. Like you need to be writing in a way, and you have to have a deep level of understanding and you have to have a deep EQ skill to practice the empathy of understanding what it would even take to get that kind of response from them. And I think that's probably my superpower in business at large is understanding from that seat of another person. And it just takes time to practice and think through that. And I think that's in hindsight, I would do that exact thing over again. I would spend the exact same amount of time understanding and reflecting back to make sure I understand exactly what would it have been to make Gina say, yep, we're in. And again, I think if I had pushed harder, I may have invited more. But I think I had like, again, probably a little bit of luck in this too, is I just hit that right spot. And but I think it was a dedication to really understanding and talking and clarity on what was a win for them.
I think you also had enough chips in the experience bucket to increase your probability on that luck.
Yeah.
If I were to repeat back what I think I heard you say, your email potentially looked like this. Correct me if I have it wrong. Alignment on vision of where they're headed as a company, how you're able to help them achieve that vision, what you've done in the past, what that equates to in regards to economics, as I think what you're hinting at, which is the value of your impact
Yeah,
for them and what that means for them present day and for their next round, how you think you can coordinate resources and be involved to achieve that, and then what it needs to look like for you to hit go on that. Something like
exactly right.
that structure
Exactly right. Exactly right.
with also love and respect at the end. So
A
since
lot,
like
a lot, a lot, a lot. And I think
yeah, a
it was,
lot of empathy.
a lot of like understanding that exact human that that letter is going to land inside of, and understanding exactly how they want and need to be communicated to as well.
Right. In the world that we're heading to, kind of as a bookend to our conversation, it has AI, it has this technology and service convergence. What are some of your predictions? Where do you see agencies, software companies, product businesses? What are some of the things that we can hold you to 5 years from now to see if you're right?
Yeah, it's interesting. I think about the parallels between here and the early internet days a lot. I spend a lot of my time thinking about that right now. And I remember a lot of people being afraid of what the internet was going to mean for their particular businesses. And there's a lot of parallels to where we're at now. We have the ability of hindsight now to see around the corner of what that looked like. And I'm not sure that we can see around the corner yet. But if I made some predictions, I would say there's going to be resurgence of agencies that are leaner, more efficient, and more powerful with AI than before. And so I think you're going to see a rise in like specialized agencies that are powered by AI. I think we'll specifically see this in marketing realms, but also in software development realms. So I think you'll see smaller, more skilled, more powerful teams who are having, instead of specialists, there are specialists running teams of agents that just make the margins of those businesses more attractive so that more skilled people are drawn to that leverage. And then I also see that there's going to be kind of a wipeout of the middle and lower class technology companies where they have maybe been follow-alongs of more kind of complete deals before. And those more complete companies are going to be way more efficient with time. And then the last prediction, I think that we're going to see agencies who are specializing in building software specific to the organization versus out of the box solutions being built. And so there's going to be kind of at the highest end here, companies that are just building custom tech solutions for themselves that are proprietary to their organizations versus having to use a company like HubSpot or Salesforce out of the box. They can build their own solutions that are custom to their organization in a way that makes sense. So those are my three predictions. And what do you think about those?
I completely agree. Like most in the service business, you're providing a solution that has a hopeful, a positive impact on a business. There's not going to be any drop off from folks who say, how do I get more leads? And I need help from someone to drive more business to me. How we go about doing that for sure. I think most agencies, though the adoption rate of AI at the expert level is rather low, I think a lot of them will get on the train. But we have this weird timing going on, Darrell, which is
Yeah.
there's a lot of businesses that are owned by individuals who slowed down in their technology adoption. And most companies evolve at the pace of the founder.
Yeah.
And so I think there's going to be some disruption. I'm concerned with, the entry level roles. I'm concerned with that within companies, marketing departments, professional services in general, entry level roles. I think it's harder and harder. But like the internet, like digital, like social, like mobile, those who are born native to this, like you and I were, when we just started showing up as the bloggers to all these authors and these old folks who were publishing books traditionally, they look at us and go, wow, they're so smart and fast. And all we are just ahead of them. We're not any smarter, we're just ahead of them. And I think the younger generation is going to be ahead, who are AI native. And so I'm very optimistic. I'm very optimistic. Like you, I think there's going to be disruption, but a lot of hope and a lot of great value created from it.
Yeah. It's a fun
Darrell,
time to
what
be
a great
alive.
way. If someone wants to reach out to you, why should they reach out to you? If it's just to say thank you for this time, but what are you up to now? And if someone finds you as a resource or what it is that you're building next and they want to connect, how should they do that?
Yeah, LinkedIn's the best place to reach out to me. You can just find me. I'm the only Darrell Vesterfelt in the world. So it should be pretty easy to find me. And then you can also send me an email, darrell@mounthaley.com. I'd be happy to converse with anybody. And I say this at the end of every podcast that I'm on. I give out my email address because I genuinely am happy to help you wherever you're at in your process, because there were people who were ahead of me that I was really grateful did the same for me, or people that didn't that I really wish that they did. And so if there's any way that I can be helpful at all, bouncing ideas, giving thoughts, either send me an email or find me on LinkedIn. I'd be happy to connect.
Thank you so much, my friend. Appreciate you.
Yeah, thank you.
If you like this episode, probably like one of our other episodes. Click here.